Today's publication of the Swiss National Bank's balance sheet and allocation data for its foreign exchange reserves revealed a substantial surge in FX holdings for the euro and other currencies like the Aussie dollar. Joining me now to discuss the Swiss Central Bank alongside the sustainability of the Euro-Swiss franc floor is Tony Nyman, FX Fundamentals Manager at Informa Global Markets in London. Tony, thank you very much for joining me. Now, if we dissect the figures somewhat and also look at the SNB's process of diversification, what do you make of today's data release?
Well, most interesting to us, Rowena, as you say, of the makeup of the FX Reserves balance sheet, was the jump in the euros to 60% in Q2 versus 51% quarter previous. That was certainly at the top end of market expectations and considerably more than we thought. The market was considering a figure closer to, say, 50 billion Swiss. That talk reflects the surprise of the markets generally, in particular in the likes of sterling, which, judging by the data, actually fell during the period to 3% versus 5% the quarter previous, and the others section, which includes the likes of SEK and Aussie, rose very marginally to 4% versus 3% again before. During the period, there was plenty of intraday FX market talk that heavy euro recycling, as we like to call it, was going on in favour of the dollar, the SEK, sterling and Aussie at the expense of the euro. So yes, very surprised.
But looking at the mountain of foreign exchange reserves, does this provide any more clues as to how long the SNB can and will sustain its cap on the euro-Swissy?
We consider the data today as a possible euro-dollar weight ahead, given the central bank are possibly holding more euros than they'd actually like to. And it seems that they're actually struggling to diversify, presumably not wanting to distort markets too much. Regarding your question of will it hold the 120 cap, well, at the moment it seems, judging by, for the most part through the quarter, 120.10 was basically, it was stuck. So it seems that they're not having too many problems. As I've said, they say they're prepared to buy unlimited amounts of euros. So it seems they're prepared to go on. Whether they still need to is possibly another matter, and even more interesting because the Swiss economy, especially compared to other nations, is continuing to grow. In Q1, Swiss GDP came in much firmer than forecast at 0.7 quarter on quarter. So it's a success at the moment, and they will continue to exercise the cap, we think, for the foreseeable period.
Well, over the last few months, the Euro-Swiss franc has hovered mostly around the 120 level. Looking at the current market conditions, the trading environment and volatility in the markets surrounding the European debt crisis, do you think this is where we'll stay now for the rest of the year? Because beforehand there was market speculation that there would be a raise of the floor to 125, but that has diminished.
That's absolutely diminished. You get the odd big name bank that says, oh, they're going to raise to 125 and to 130. This continues to be denied by the SNB. It's working at the moment at 120, and that's where we think it will hold. Volatility-wise, there's absolutely nothing going on. It's stuck at 120.10. Every time you look at it, there's no pressure, or there's seemingly no pressure building. As I said to you, in a sense, the euro could come under pressure on that data if the SNB believes that they need to recycle these euros into and out of the euro into currencies like the Aussie, the SEK, the pound, which are all more relatively attractive. So the floor could get tested, but they've made profit while exercising the floor, and we think the criticism would be heavy if it gave way.
What about the SNB in relation to recent moves taken by the Danish central bank, which imposed negative interest rates? Given the increase in the SNB's currency reserves to defend the cap, would it not be wise to consider taking additional measures at some point? Although I know there is also a mix of views on the implications of imposing negative interest rates.
Well, from what we gather so far, Swiss central bankers over the last couple of years, through Hildebrand and now Jordan, they don't seem to change policy too much, and they have come out and said there's not going to be negative interest rates, and we have to take them at their word. It seems, as we've talked about, they're prepared to buy unlimited amounts of euros against the Swiss, and it seems that with FX reserves almost 50% of GDP, people are saying that maybe they'd let that rise to even 100% of GDP. They don't see it as a problem. That's their policy at the moment. There's been talk of other options, and such as tax on deposits, capital controls, but at the moment, foreseeable future, we don't see anything like that happening.
Well, Fritz de Burg takes his position this week on the 3-person SNB governing board. How suited do you think he is personally, Tony, for this role and the challenges ahead in terms of defending the cap and managing the country's expanding FX reserves?
Well, I don't know too much about de Burg, but what I do know on the SNB is that 3-man board don't tend, certainly publicly, to come out and go against each other policy-wise. The 120 cap was certainly fully endorsed by the likes of Hildebrand, Jordan and other current members, and we don't see that changing. Again, I've talked to you about reserves, and it seems, from what we hear, that they wouldn't have a problem seeing reserves as the total of GDP increase further.
Tony, some very interesting comment made there. Thank you very much again for joining me. Now, coming up all this week, we'll have all the latest on the central bank rate decisions and more Forex updates and general financial news. But for the moment, goodbye.